New 100% write-offs under Trump's big, beautiful bill. So, my millionaire friends, billionaire friends have been talking to me about all of the write-offs that they have to do and expenses and things that we can do before the end of 2025 to take advantage of some major write-offs where you could end up having no tax liability whatsoever. I'm going to break those down for you. I'm going to share how you can take advantage of these tax write-offs, these deductions for yourself, and how you can put yourself in an awesome financial position. Let's go.
Noel. Yeah, she can fix that. You gotta get it done, or you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
Okay, so let's get right into this. This video is sponsored by my friends at 𝐁𝐿 Consulting. They can actually help you get business credit, get business trade lines, and get business funding, all from just one phone call in some cases. They will give you a free consultation. Use the link in the description box. More on them later. So in the big, beautiful bill, there are 100% write-offs available. Yes, 100% write-offs for certain things. And I'm going to go through number one, vehicle purchases. For many years in the tax code, you have been able to write off your car that you use for business. So if you have a legitimate business and you have a car or a vehicle that you use legitimately for that business, you were able to write that off through depreciation and through IRS code section 179. This will allow you to not only write off all of the expenses, or you could write off the mileage. Those are deductions that you could use from vehicle usage. But with the actual bonus depreciation that has been put in the one big beautiful bill, you can literally purchase a vehicle and end up writing 100% of that off. Let me explain. So you can have a vehicle that is like a passenger vehicle, but that is going to be a vehicle that weighs less than 600 pounds. Here's a quick note from on the IRS that will give you a partial deduction for a passenger vehicle. However, the big deduction is going to come from vehicles that weigh more than 6,000 pounds. You literally can now write off 100% or up to 100% of the entire purchase price of a vehicle that has been purchased in 2025 that is used for your business. So basically, if you use the vehicle at least 50% of the time for your business, and you purchase the vehicle after January 19th, 2025, you will be eligible for 100% bonus depreciation, which could actually come out to be the entire purchase price of that vehicle or up to the entire cost of the vehicle. But there are some limitations. Obviously, you will need to talk with your tax professional that does your taxes to get the caveats, because obviously it's under certain incomes. But again, 100% of the entire purchase price could be written off under 100% depreciation. So all of the people that you see buying the Mercedes G-Wagons and all of these SUV type of cars, this is actually an incentive, and you could be a part of that and be taking advantage of that write-off as well. Again, using it in your vehicle and using it in a way that generates income for your business. So again, pretty much all of us in real estate, that's pretty easy, especially if you're a licensed real estate agent or a broker. Obviously, we are driving around, driving to properties, but I can see how this could be applicable in almost every single business. So again, just want to make sure that the vehicle is considered a heavy vehicle. Okay, here is a quick graphic to help you with that. Number two, real estate and property improvements. Now, of course, Noel Randall is a real estate multimillionaire entrepreneur. I absolutely love owning real estate, managing my real estate. So I was definitely giving this one a thumbs up. Let me explain how this one works. Having now 100% bonus depreciation on real estate purchases and property improvements, this is going to be amazing. Previously, there has been depreciation, and this is one of the reasons why people love real estate, because the IRS tax code has lots and lots of benefits for real estate entrepreneurs, real estate investors, and it has gotten even better. So before, we would do improvements to our properties. I told you I always paint, redo the floors, always improving the properties, because again, that helps with appreciation, that helps with cash flow. You can raise rents. You really do want to spend money on your properties, because it usually does come back to you full-heartedly when you file your taxes. But this has gotten even better. So for example, if you were buying appliances, or you were redoing the flooring, or you were purchasing furniture, again, I have Airbnbs, and you were doing these for your properties, you would be able to write off a portion of it over, like, for example, 5 years. So some things are 5-year depreciating things, some things are 7 years, some things are 15. Again, get with your tax professional. Noel Randall is not a tax professional or an advisor, but I have lots of CPAs that I pay lots of money to, and they tell me these things. I I paid for them, so I'm going to tell you for free. So, like for example, the appliances, it's 5 years. I know that for sure. So say for example, we spent $50,000 on these improvements, appliances, furniture, and flooring. Okay, and these cost $50,000. Just using that as an example. Well, it was a 5-year thing, so it'll be depreciated each year. We could write off $10,000. However, with this 100% depreciation, we can write off all $50,000 this year. So this is why you see lots of investors heading out to Home Depot and Lowe's and HD Supply Company and flooring, because this is now the time to get these things done. So we have these tax write-offs. That is amazing. Again, you can even do furniture. So again, and then some things are 7 year and 15 years, but this has been amazing. So if you were even thinking, if you have a rental property, you're thinking of getting a rental property, this could be an amazing thing to do before you get to the end of the year. And obviously in 2026, these are amazing deductions that could actually take your tax liability down to zero. Number three, equipment and machinery. This is amazing because this actually fits for a lot of business owners. Again, if you have a business, please reach out to my friends at Justin Merch Consulting. They will give you a free consultation and they can help you get business credit. They are absolute experts when it comes to business credit and business funding. Every business needs to improve their business, and you can actually create a lot of tax write-offs. So if you don't have business credit, it is time to get it. Reach out to my friends at Justin Merch Consulting. Tell them that Noel Randall sent you and get the business funding that you deserve. You can actually have $50,000, $75,000, $100,000, and it's in your business's name, and be able to improve your properties or buy equipment like I am explaining. Let me get back to this. So with the equipment and the machinery, what makes it so amazing is because pretty much every business needs these things, and there are ways where you can find to create these write-offs and these deductions for yourself. For example, most people think equipment and machinery, they don't necessarily think, well, maybe I don't have it. But again, if, for example, you are a contractor, you could buy new tools and write them off. If you are a barber or a hairstylist, or you own a salon, you can get new chairs and new equipment and new things for the salon and create a 100% write-off. If you are a photographer or a videographer, you make movies, you can get new cameras and new lights and new setup. If you are a doctor or a dentist, you could buy new technology, new equipment. You can upgrade your office and some of the equipment and features inside of it and create 100% write-offs. The amazing thing about equipment and machinery, it includes things like laptops, computers, software. So again, upgrades to technology. Of course, heavy equipment, but even furniture. So refurnishing and redoing the office could qualify you for a 100% write-off under this new bonus depreciation write-off that is available under the One Big Beautiful Bill. So giving quick examples on how you really could take advantage of these 100% write-offs. Before, you would have to write off a portion of the equipment that you bought. So if, for example, you had a landscaping business and you bought new mowers and you bought new trimmers and you bought new things for your landscaping business and you spent $100,000, under the old rule, you would have to depreciate that over 5 years. So that would be $20,000 per year that you were eligible to write off. But under the One Big Beautiful Bill, you could write off the whole $100,000 in this year. That is a big change, and that is how you could end up with 0% tax liability. Again, this works for multiple businesses. So even if, for example, like I said, you were a videographer or photographer and you bought new cameras and you bought new lighting, for example, under the old rule, if you spent $25,000, you would be able to write off just $5,000 per year. But under the new rule, you could write off the entire $25,000 in the first year. That's amazing. But here is the fun part. Here is the amazing part. It is actually 100% of the purchase price. So yes, the purchase price, the sales tax, the installation, the setup costs, all of those things are included. Again, a 100% write-off of the entire purchase price. So this is unheard of. This is new. This is actually something that you should be taking advantage of, because most rich people do not want to pay a lot of taxes. Most of the middle class bear the burden of paying taxes and having their taxes come out of their W-2 jobs and having your employer take it directly from you. But having a rental property or having a business on the side could actually create a situation where you don't owe any taxes and you actually get a refund on those taxes that you have been paying from your employer. So you want to move into this new way, because the less taxes you pay, the more capital you have, in your business to deploy on things that can make you money, not cost you money. Let's keep going. Number 4, 100% of research and development expenses. So this is actually very major. This is very major because most of the time you have to do research and development for certain products and different things that you come up, especially like if you were thinking of creating a hair care product or a skincare product and different things like that and having your own products, you need to invest in research and development. And now these things are actually eligible for a 100% write-off under the one big beautiful bill. So again, get with your tax professional. And if you have these businesses, make sure you are taking advantage of them. All right. Number 5, production properties. Now, this one is going to be very specialized because obviously this is a specialized type of property, a production property. So a property where you manufacture something. Maybe you have processing like food processing, or again, maybe you have a hair care or a skincare product and you actually have the manufacturing and you're interested in having a plant or a building where you do your production. This is major because this can lead to millions of dollars in a tax write-off, because this could be millions of dollars that you have invested and you actually get to write all of those costs off, 100% of them, for a production property. However, there are some caveats. Let me explain them right quick. One, the building has to be used primarily for production. You get that. This is a production property. The property needs to be used for that. Number 2, the owner of the business, you and your business have to be the one that's producing. And there you can't buy a production building and then like lease it out and get these write-offs. It has to be your owner. You're the owner of that building. Your business is producing things in that building. It is for your business. And then number 3, you have to have a 10-year commitment. You have to be in that building. But again, manufacturing production buildings, you keep those buildings 30, 40, 50 years. So a 10-year commitment is the minimum required for this. So again, if you have that type of business, you are thinking about growing your business, upgrading your business, this administration is definitely doing the most that they can with the tax code to make businesses pay as little taxes as possible and incentivize where you have all, where you pretty much can end up with no tax liability whatsoever. One more point. So regardless of politics, the one big beautiful bill has some benefits in there for you and you should be taking advantage of them. Having a business is going to be the key to surviving in this new economic situation that we see ourselves in. So please reach out to my friends at Justin Merch Consulting. They are top experts with business credit and business funding. They can help you get the business built. They can help you get the trade lines. They can help you get business funding. And now is the perfect time to secure you some business funding and take advantage of not only the money that is out there, but also the tax write-offs that are out there. This is an amazing time to become an entrepreneur and take your business to that next level. There's a link in the description box, Justin Merch Consulting. They are absolute experts. Call them today. It's absolutely free. I want to make sure that you have all of the knowledge, all of the resources, and all of the tools that you need to be successful. This is Noelle Randall. To your success. Hey, hey. All right, go ahead and subscribe to this channel. And if you are subscribed, go ahead and join. I have a membership and you can just join. It's really inexpensive and you get exclusive access to my content. All right, I'll see you in the next one.